Hey everyone, Coach Investor back to another Lemonade video for you today. So Q2 report came out. In my eyes, it was a very good quarter. The business is still growing and accelerating. The stock is obviously down after hours. By the time I'm filming this, it's down 8 to 9%. But overall, I don't care about what the stock price does after an earnings report. We've seen this with a lot of companies out there. Great earnings report, stock is down. But sometimes you have bad earnings report and stock is down very much fastly. So in this video, we're obviously going to have a look at the Q2 report. I'm filming this before the earnings call. So if there's something very important that they announced during the call, I'll make sure to let you know in the comments or in the community post. Now, if you don't want to listen to the whole video, they added more than 100,000 customers. The business is growing in force premium per customer. Gross loss ratio is obviously down from Q1, but still a bit up from the previous quarters at around 72-74% or so. The business is booming. The product mix is great. Car insurance, obviously no news on that. Life insurance, there is some news. If you want to hear more about that, just sit back and relax. We're going to have a look at all of that in this video. Before I do so, I just want to thank today's sponsor, the Motley Fool. And again, these are my views and my views only. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You guys know I love finding new investing tools and resources to help me find the latest growth stock and innovative company. And right now I have a discount for one of my favorite services, the Fool offers. Through the Motley Fool's stock advisor service, you get access to a ton of expert stock picks. Every month you'll get 2 picks that are aimed at growing your wealth and to help you realize your financial goals. Stock Advisor's average stock picks have returned over 500%. If growing your money is something you'd like to do more this year, you can visit www.fool.com/couchinvestor or click on the link below for access to my special offer and decide if Stock Advisor is right for you. Now let's dive into this. Alright, so let's jump into the earnings report. I will be putting some pictures on to compare Q1 and Q2. That way it will be better visually so you can see how better they did quarter over quarter as well as year over year. Alright, so first up we have in-force premium that's up 91% year over year to $297 million. Premium per customer up 29% year over year to $246. Now both of those numbers, as you can see right now, are actually up quarter over quarter, but that's because they added a significant amount of new customers, over 100,000 customers, and up 48% year over year. Now again, I said this in a couple of videos, do not look at the percentage increase of that customer base. Look at the net additional customers, because as they grow more and more, you cannot expect them to add 15% or 10% each and every quarter. Still insurance here, it's not iPhones, iPads, or whatever. Gross loss ratio obviously has seen a significant decrease since that last quarter, but has still seen the effect of the Texas freeze. And that's why it's still up 74%. For gross earned premium, we can see a nice 90% increase year over year to $67 million. So these were the highlights of this earnings report. Now I'm going to go even deeper, look at each product mix, look at car, life. Now overall, they actually exceeded their own guidance that they gave in Q1. They also raised guidance again for the full year. So they are fully expecting to even accelerate the business, which is great to hear. Now, if that's all you needed to hear, fine. I would really appreciate if you could hit that thumbs up button. All right. As for Lemonade car insurance, as I said before, still nothing concrete on the actual product. They've sent out some surveys to potential customers. They will obviously use telematics data in their product. They've also been co-creating with prospective customers, so that's all great to see. Now, at this stage, there's no concrete launch date, and they're obviously not including the in-force premium associated with Lemonade Car in their guidance for full year 2021. All right, now as for the product mix, they actually added this really nice breakdown here. So we can see that renters is now at 56% of the whole business mix. It was previously above 75%. So that's great because renters isn't very lucrative. Homeowners is at around 30%, pet is at 13%, and it's only been 1 year since they released that. Life insurance, as you can see, is right now at 1%. Obviously, this is just the first or the first and a half quarter that they released that product. Now I'm going to focus a bit more on the pet insurance because when they announced it, I said this product is what's going to attract many new customers, and they can upsell and cross-sell those customers in the future as well. They say here that for their homeowners product, it took them few years to achieve profitable unit economics as measured by LTV and CAC, customer acquisition cost. It took just a matter of months to do the same for pet. Now for existing customers, you can say here that they state they've made tens of thousands of pet cross sales, which represent about 30% of their total pet in-force premiums as of Q2 2021. Now why is pet such a big deal? Well, if you've owned a pet before or if you own a pet right now, you know that pets are part of the family. With the pandemic still going on, lots of people have actually adopted pets. It's been going on for a while. Pet ownership has been growing year over year. You can see that with companies like Petco, with Chewy, they're all doing great. Obviously, when you have a pet, you have to take care of that pet. Insurance is something that is a necessity. Now, regarding life insurance, that has been a bit slower out of the gate, but right now the signals are actually strong and they'll continue to spend advertising dollars towards that product. Homeowners delivered robust triple digits year over year growth, which is great. Renters business always growing fast. This is the foundation, let's say, of Lemonade, and most of you know their goal is to take renters and then make them graduates so they become homeowners. When they become homeowners, obviously the premium is much higher, but the acquisition cost stays the same. Alright, regarding geographic mix, if you've seen my previous video, my preparation video for Lemonade, you know that they opened up the renters insurance in Florida, which is the fourth largest renters insurance market in the United States. But obviously that market comes at a risk of catastrophes because, well, Florida, typhoons, whatever, that's something that happens in that state. So they're fully aware of that. Regarding Europe, still not that much data, but they said that they started to invest more in R&D in Europe. Hopefully they can elaborate on that point in the earnings call tomorrow. Well, actually today when you're watching this video. Alright, and last point before I conclude this video, very important point, and that's the reinsurance model. They actually renewed the contract. Before it was 75% ceded, now it's down to 70%. So they renewed 15 of 20 points that were up for renewal, which means that obviously if nothing goes wrong, Lemonade gets more into their pocket. If there's another Texas freeze, then obviously they'll have an extra 5% hit. But that was the goal from the start. If you've watched my interview with the CEO Daniel Schreiber, he said it from the start. As they move further into the future, as their business grows more and more and becomes more robust, they'll obviously cede less to reinsurance and take more risk on themselves. Makes more sense, right? Right, one more thing actually before we go into the full year guidance. Revenue was $28.2 million, $5 million more than last quarter. And as we move into the third quarter, we can see that this new agreement thing is obviously going to change again. Alright, guidance for Q3 and guidance for full year. Now you can see here, I'm not going to mention every single number, but you can see here in-force premiums between $336 and $339 million, up significantly from this quarter. Gross earned premium between 76.5 and 77.5 million, up significantly as well. Revenue we've just seen was 28 million. Now they're also expecting an increase of 5 million. Now for the full year, I will pull up their expectations from Q1 for the full year, and you will see they again increased mostly everything. In-force premiums, gross earned premiums, revenue, everything went up. So that's also great to see. Alright, to conclude, to me this was a very good quarter. I like the unit economics, I like the growth in customers, more than 100,000 customers added in just one quarter. For an insurance business, pretty good to me. Everything is growing, everything is accelerating as well. Full year guidance raised again, so they are fully confident that the business is doing very well and will be doing even better in the future. Now I can already see the comments saying, oh, but the stock is expensive, valuation doesn't make sense. I agree, but that doesn't take away from the fact that the company is doing very well, had a very good quarter. That just means that a lot of people like this company and are willing to pay a premium and still hold that stock at the current price. So I hope that answers your valuation questions. Now that will be it for this video. I would like to know down in the comments below what you think about this quarter, what you think about Lemonade, and if you like these videos, leave it a thumbs up. If you haven't subscribed to this channel, maybe hit that subscribe button. And as always guys, take care, stay safe, and see you all in the next video. Bye bye.